All right, we are live. Hey, thank you so much for joining me. I'm Mitch Goldberg. It's time for our live stream. It's your show. It's my show. It's our show. It's called Be the Boss of Your Money, and it's about personal finance. As we talk about here at TV every Monday through Friday at 4:30, and we're going to talk about the market, the big rally. We're going to talk about why we, you know, say stay the course. People are trying to figure out the best time to buy. You know, the best time to sell. And what really works right now, I think, is sticking to quality, being patient. What else could tell you? We get back to the same lessons over and over. But when there's times of stress, market calamity, that's when, we need to really stick to our guns. That's when I think you need my help, okay, if I may say. Day like today, if we have a few more days like this, you won't need my help because everything will be going just fine. But believe it or not, I spend a lot more time advising people what not to do than what to do. Anyway, big rally in the markets today. We cleared a big inflation hurdle. This is what we've been talking about for weeks, why the market's going up, why we're rallying. We talked about how by the time we have two negative quarters in a row of GDP, the market will have already started to rally. And that's exactly what's happening. That's why you have to listen to the show so you get a handle on these things, on what's happening in the markets. Okay, so today we're going to talk a little bit about that and make sure you're in good shape going forward. So if you have any questions, you know what to do. Hit me up in the comments. AMA, ask me anything in the comments. We could keep it finance related, but I'll take some personal questions as well. And if you have words of wisdom, words of encouragement, those are always greatly appreciated as well. I love hearing from you. It's the best part of doing this. And, if you don't mind, give us a like, hit the thumbs up or the heart or the applause or the wow, whatever reaction is available to you, depending on which social media platform you're watching on. And we're going to roll a quick intro, and it's going to be a quick, interesting show. So enjoy. All right, we're back. Thank you so much for joining me. It's Mitch Goldberg. You're watching my live stream. We talk about personal finance. We talk about investing. We talk about insurance. We talk about mortgages. We talk about credit cards, credit card points. If it has something to do with money, I've covered it here. I'll be covering it again and again and again because let's face it, sometimes we need a reminder. Sometimes things change. We need a new update. And sometimes you're just new to the show or you missed a previous episode and you need to be here to hear what I have to say. Everything I say here is educational. It's based on experience, my experience over 30 years as a financial advisor, and I speak with financial advisors all the time. We talk about challenges in our businesses, but most importantly, we talk about how we've helped clients overcome challenges, and I like to talk about how clients themselves have figured out how to overcome a financial challenge, and I share that with you because maybe you can use that to overcome your own financial challenges. And who doesn't have a financial challenge? We all grow into our income. In other words, the more you make, the more your lifestyle grows. And then your lifestyle grows more, and then you need to make more money. So it's always that, money chase to get to the point where we're making so much money that we're saving above and beyond our means, investing, and really getting ready for retirement. It's not so easy. It can be done, and you don't have to make a fortune to get there. It's really a matter of not allowing your life's expenses grow into and above your income. There's a term for it. It's called lifestyle creep. You make a little bit more money, and all of a sudden, you're leasing a nicer car. You're wearing nicer clothes. I'm not saying you shouldn't drive a nice car and shouldn't wear more expensive clothes, but it's got to be based on your income. In other words, your lifestyle follows your income, but sometimes your lifestyle goes ahead of your income, and then you're under this pressure. to have to perform, to have to do better. If you're in sales, you have to sell more. I mean, it's a tough position to be in. And believe me, if you are in any position where you do your own business development, you don't want to feel that pressure because it shows. It really shows when you are under pressure and you have to make that sale, bring in that prospect, turn a prospect into a client. When you have pressure, it shows, and it's it's a real it's a real turnoff when it shows. It's a turnoff to people, and you don't want to look like that. So my basis for everything is live within your means, and as your means grows, if at all possible, try not to let your expenses grow. Do you need to have like 5 or 6 subscriptions to different entertainment platforms, for example? Speaking of entertainment platforms, let's take a quick look at Disney. The stock is moving up sharply in aftermarket trading. Disney is a stock that has been getting absolutely pounded in this market. One of the leaders to the downside, I know a lot of people are going to say, well, it's because they went woke in Florida. And, no, it's all about the numbers because a lot of other stocks went down that weren't having a problem with, politics. So it's about the numbers. Disney has bounced sharply off its high. I mean, I'm sorry, has bounced sharply off its low, and the stock is soaring right now in aftermarket trading. The stock, as you can see, let me see if I can make this bigger. All right. Disney is up over 5%, up to 118, up over $6 after being up over 4 today. So up over $10 between the day session and the aftermarket, bouncing nicely off its low. And, sure enough, Disney is back in play. And now you've got fund managers, institutional investors, when they see the company beat on subscribership growth for Disney Plus, which is a big thing for them, when they see that their attendance parks are full and generating a ton of money, their content is always doing well. When institutional money managers see that, and then they look, and they look at, that the stock is down 27% and the company's doing better than they thought, what do money managers do? They buy the stock, and that is what's happening. And since we've been talking about this, the market's gone up in the last, let's say, month and a half. All of a sudden, money managers, your mutual fund manager, your hedge fund manager, even your personal financial advisor may have gotten too conservative, sold off too much in stock, hunkering down for the big bad bear market, which we already had. And then you find that you have too much cash. Market's going up without you. You're underperforming. You're locked in losses. And now you've got to put that cash back to work rapidly. This is something we've been talking about now for over a month, and it's exactly what's happening. This is why you have to watch my show, and I love having you here. So, by the way, did you give me a thumbs up if you don't mind? So this way you could help me spread the word about the good work and the educational content I'm creating here. I don't have sponsors. I pay for all this myself. It's my time, the cameras, the microphone, the all the stuff on my desk here, all the equipment. Even this boom arm. You can't tell how big the boom arm is, but like even this boom arm here is I needed a really high end boom arm. I got the lights going, and behind me I have the accent lights, Bulls and the Bears behind me. So if you don't mind, give us a thumbs up and help us spread the good word. Now let's take a look at how overall markets did, and something really good today. All right, when I say really good, let's just go right here. The VIX. All right, see this? 19.74. You've heard me say this. This baby goes under 20. We have ourselves a new leg up, a durable rally. Stocks could keep going up. That's what happened today. The VIX toward the end of the day went below 20. This is significant. Okay. This is a very bullish indicator. And that is, helping stocks continue their recent ascent off the lows. Now let's take a look at the major averages. Okay. So Dow up over 500 points. Listen, 1% is 330 points. So it's 1.6%. Definitely gets our attention. But nonetheless, we see the headline number at a 33,000 Dow. It's just 1.63%. Let's not get carried away. But the Nasdaq up almost 3%. That is a big move, and the S&P 500 up over 2%. S&P has a lot more technology in it than the Dow Jones, so that's why Facebook was, or I should say, Facebook Meta was a big winner today. We'll take a look at these. Gold weekday oil was up a drop, big deal. Still 91, way lower than what it was, like 128, 130 a few months back. And everybody was saying now it's going to go to 150, 200. Where are those people today? It's not, didn't go there, right? We talked about that. It's not going there. The cure for higher oil prices is higher oil prices. And then we drill more, we find more, we use less. And before you know it, the market regains balance. Okay, as we said, the VIX is below 2. Let's take a look at the bond market. Advertisements. Here we go. The 2-year was off a bit, just a drop, 3.22. Yields are down across the board. 10-year, 2.785%. All right. Let's just take a look at this. Which sectors did the best? Economically sensitive sectors. Building materials up the most. Consumer discretionary, communications, XLK, that's technology. Communication services is like Facebook and Netflix. We're not talking about Verizon and AT&T. Those are tiny pieces, tiny slots in the XLC, the communication sector ETF, just because Verizon and AT&T are just not such big companies anymore compared to the top 10 NASDAQ stocks. Financials had a good day. It's really hard to find anything negative about today, but let's take a look at a couple of individual stocks. Industrials, Boeing. Where's Boeing? Come on, Boeing. Where are you? Boeing right here. Boeing was up $4. Boeing has been on the move. Boeing keeps going, right? Boom, boom, psh. So they just delivered their first Dreamliner in over 2 years, and all of a sudden they're delivering jets again, and the world needs it. So good position to be in now that they are cleared for takeoff, no pun intended, with their Max jet and their Dreamliner. Caterpillar up $4. Just a very good day for economically sensitive stocks, and we already went over Disney. So let's just take a quick look at what happened today. Market's been going up on the expectation that inflation has peaked, something we've been talking about. I've been saying inflation has peaked. That's my sense. I have to say that's my sense that inflation has peaked. Okay, so it's my sense. You could disagree, but I feel inflation has peaked. And now you see certain food prices coming down. I mean, lumber, metals, a lot of industrial component type products have been coming down also. It'll feed its way through consumer prices, and it already actually is starting. You see the price of gasoline coming down. High threes now to get a gallon of gas. I'm going to Jersey over the weekend. I wonder what it's going to be in Jersey. Jersey always has really cheap gas, by the way. So it's like so exciting. You get to Jersey and you're like, oh my God, I can't believe what I paid for gas. It's so cheap. Yeah. I think it's a guy thing. I kind of like become my father when that happens, and I get all excited about the price of gas. Yeah, so what we're talking about last week is if this week has an inflation figure that confirms the belief that inflation has peaked, that the Federal Reserve is closer to the end than the beginning of its rate increase cycle, that would be very bullish for the market. And as you can see, the beat continues. It was a very bullish day for the market. Money's going into stocks. This is a really powerful move up in the market. This isn't just like a bounce on thin air or super light volume. This is real accumulation, and the VIX, that number below 20 that I showed you, that backs it up. The VIX is the fear gauge. The VIX measures basically what institutional investors are willing to pay for products to hedge their portfolios. And the more they hedge, the more they pay. It's an indication of worry, and maybe they want to scale back on stocks. When the VIX goes below 20, that means they're excited. They just want to start buying stocks, continue to buy stocks. So this is a really good rally. What else can we say? I had more thoughts about what I wanted to talk about earlier today. I didn't write it down. I was just busy. It's one of those days. I missed the show the last 2 days. I had plans that I couldn't be. I was not able to be here on Monday. Yesterday, my mouse died. This is a new mouse. It's like a vertical mouse. Can you see that? See how this is how it's flat. So it's a vertical mouse. But the mouse I've been using for like 5 years. The battery died. The charger to recharge it broke, and I'm like, I can't use my computer. I can't even use a mouse. So I had to run out, bought this yesterday, and then took my daughter out to dinner yesterday. And you know what? I had to miss the show, but that happens once in a while. This is life, and it is summer, and I could use a few days out once in a while, right? Do you have any questions? Hit me up in the comments if you think of anything, because I'm about to end the show. If you wouldn't mind, give us a thumbs up or whatever reaction is available to you on the social media platform you're watching. I hope today made sense to you why the market was up so much. Inflation is lower, interest rates are lower. When interest rates are lower, that's good for growth stocks, it's good for tech stocks, it's good for high flying stocks. It's just plain old good for the market. And then you have lower inflation, which means the Fed, maybe in September, instead of raising 0.75%, they'll only raise 0.5%. But the street is going to start to expect that the Fed is getting close to the end of its rate hiking cycle. Now, we had that 500,000 employment figure last Friday. That's what started to knock the market down the last couple of days, because people are starting to worry, well, maybe inflation is higher than it is, and we're going to get a really bad inflation number. We got a really good inflation number. And just remember, these big employment numbers that come out once a month, first Friday of every month, just remember that the big numbers are very, very often revised either higher or lower. So if it's a low number, it's often revised the opposite direction. If we get a high number like the one we just had Friday, that's typically, revised lower. So a lot of people expect revisions to come in and pull that number down, which is actually bullish for the market. So we're in a position where bad news is good news. Economic slowdown, talk of recession, gets the Fed to pause on its rate hiking cycle, stocks go up. If we get really good news in the economy and the economy is running hot, that's not so great for stocks, as the Fed has to raise rates, and that is not right now perceived as good for stocks. So that's it, folks. That's what's going on here. I'm going to end the show now. Thank you so much for joining me. A massive appreciation to you. Talk to you soon. Bye.